If you've ever wondered about the real life implications to the local real estate market from US politics, here it is, the first 60 days of 2025, absolutely abysmal. These are probably the first 60 days that I've seen in the last maybe 10 to 15 years, probably 20 years, where it is the worst start to the year. Now, this is not all doom and gloom. This is entirely because there's a sense of heightened fear because of tariffs and all the flip-flopping back and forth and the constant chaos that you see in the media. The good thing is this is likely going to fatigue people in the next few weeks, most likely, and I think we're going to see some semblance of a spring market after March break. So for context, the last 2 years have been flat in the GTA real estate market, and 2025 started off behind where December of 2024 ended, meaning median prices were lower by about 2% starting in January. This is unusual. Typically, prices are up in January from the following December by about 1.4%. In this case, we started at negative 2.15. What makes it worse is that February, typically, if we have a slow January, usually in February, things just pick right up. And here we're still below December 2024's prices. So this is the concern. Now, two things happened in February that have impacted this. The biggest thing is obviously the talk of tariffs. People are concerned about losing their jobs, and then sellers are concerned about listing their properties because they think they're not going to get the money that they expect. But the biggest thing is buyers are scared. The other thing is we had a massive snowfall, so that definitely delayed listings. People weren't as actively going out there and looking because everybody was digging themselves out. So those are the two things that impacted the real estate market in February. I personally still believe that we will have a spring market, but it is delayed. Now, the tariff talk is still ongoing right now in the media, so it's flip-flopping in terms of what tariffs are going to happen to who, when, how. And then the other thing is we're going to have March break. So typically, seasonally, March break is a slow time, and the market usually starts taking off after March break. So I do expect in the next 2 to 3 weeks, people will get tired of listening to this stuff, of the constant back and forth, and maybe people are going to tune out and we're going to see some sort of semblance of a normal real estate market. Now, it's important to revisit a favorite chart of mine, which shows the spread between detached homes, top line right here, and condos. And the reason this chart is important, this is important for those of you selling a detached home, and it's important for those of you buying a detached home that are coming from a condo. The spread in the past pre-COVID was between, 300 to 400,000, let's call it 350,000. So if you wanted to upgrade from a condo to a detached home in the GTA, you would be looking for an additional mortgage of $350,000, speaking in gross terms only. That same spread right now is almost double. So what used to be a $350,000 additional mortgage to move into a detached home, which was palatable for a lot of people, right now that is $650,000, if not more in some cases. So now it's made it substantially more difficult for somebody with a condo to upsize into a detached home. And condo prices continue sliding down, especially if you're in the core. This trend is going to continue because we have tens of thousands of completions coming online, which is going to put further price pressure on condos. So then at this point, what will happen, chances are it will probably impact detached homes as well, as they're going to probably trend down a little bit, probably not to the same extent as condos, but it's something to be expected in general for the market overall. So if you want to talk about breaking trend directly because of politics, here it is. So this green line is probably the most important thing when we review these stats because this shows us the liquidity. This is the transactions that happen on a seasonal basis. For the last 2 years, the amount of properties we were selling was way less than seasonal norms. In other words, if we were supposed to sell 10,000 homes in a certain month, we were selling 6,000, so substantially less. This is a problem for sellers, and it shows that there's very little liquidity in the market. Now, what's happening is over the last 2 months, that gap was narrowing where seasonally, there were enough transactions happening where we were bridging that gap. We were maybe 10 to 20% below seasonal norms. And then look what happened in February. We were supposed to sell 6,300 homes. We sold only 4,000. So this is not a good trend, and this is directly because of the tariff talk. I saw it everywhere. You talk to any real estate agents. If you had buyers, everybody was concerned, am I going to lose my jobs? What is going to happen with inflation? What's going to happen with groceries? So a lot of people got scared, rightfully so. This is basically the immediate result of this tariff talk and the flip-flopping. Now, what you'll see right here on the top graph, this is the new listings that usually come out during the year. So the new listings that came out in February were substantially lower. And this is a combination of two things. One, once again, the tariff talk. Sellers didn't feel comfortable listing their property, knowing, especially if they were advised well, that buyers are also scared. So chances are you're not going to have much action on your property. And then the other thing is the snow. So we had a bunch of snow. Everybody was snowed in. So for 2 weeks, nothing was really happening. So people delayed. This number is going to pop back up in March. We're going to have probably seasonal norm in terms of new listings. However, the concern is whether or not we're going to be absorbing them and whether or not it's going to be selling. I'm of the opinion March is going to be a below average month. We need to get people fatigued. People need to kind of just understand that this is the new norm with Trump in power. It's going to be just a lot of talk, a lot of rhetoric. And, I don't know how much of it is going to be backed up by punitive action against Canada. But, as long as there's fear and bad sentiment out there, and I think that will continue in March, we're going to see that in the results here. But I do think it's temporary, just like all of these things, even with COVID. If you look at the COVID charts, same thing. I mean, by July of 2020, COVID being something completely different and a lot more scary than what we're dealing with right now, things turn around because people and their lives just move on, regardless of who's president in the US. So that's my take on it. Maybe I'm being naive, maybe I'm being optimistic, but I just feel, just like in 2016, I got actually caught with Trump's tariff talks back in 2018. I was building a commercial building, and that building was 10,000 square feet, and it was a steel building. I ordered it from Ohio, and the tariffs came in, and I got impacted directly, but life goes on. The building was built. We're a little bit over budget, but things just move on. Now, on the active inventory side, there's absolutely no surprise here. Active inventory it's pretty high. We're actually approaching recession levels of 08, 09. Where we hit over 20,000 active listings. We're going to blow right past that number in March, most likely. Now, it's not all doom and gloom again, because a lot of this is driven because of the active inventory in the condo market. A lot of investor units are trying to be unloaded. And slowly but surely they are being absorbed. But again, this is going to take time. It's not going to happen overnight. And it's going to contribute to this active inventory problem that we do have. Deals are still happening to well-marketed properties with reasonable sellers that are willing to entertain all offers and work with buyers rather than just ignoring them. You can watch my video on selling a property in a slow market, which specifically addresses all of the things that are happening right now and how we're still selling properties, even with the stats being where they are.